Hello, my name is Alfonso Esparza, Senior Currency Analyst at Oanda. My estimate for NFP this coming Friday is over 200,000 jobs added to the U.S. economy. This forecast is brought to you by ForexSpace.com. This week we've seen a lot of action in terms of what central banks have said and done, and also a lot of indicators that show a bit of a confusion in the markets. The central banks are still in a wait-and-see approach. Early this Thursday, the Bank of England and the European Central Bank held rates, and as opposed to last month, they did not have any forward guidance for the market. The Fed, in comparison, went out on Wednesday, and they came out with a very dovish statement. More was expected from the Fed because right now the market is hoping that it would release a schedule for when the Fed tapering will actually happen. What the market got in return was actually more of a nebulous statement that the economy is recovering, but not at the pace that they would like, that actually tapering might put in danger the economic recovery, so they're holding off on releasing a schedule or even having sort of a tapering conversation at this point. One of the actual new indicators that was brought on was inflation. So right now the Fed is wondering if inflation is behaving as it would like. So right now, U.S. inflation in the U.S. is below 2%. So there's the risk of disinflation, which is something that Japan has endured for the last 2 decades. But in the U.S., that would be very sort of counter to what the Fed wants to do. So NFP is probably the biggest indicator in Forex. So it tells you with one number how healthy the current U.S. economy is. So everything's riding on this Friday what the outcome is going to be. A good figure will actually be a bit, will lend some credibility to the participants that are asking for tapering sooner rather than later. But if it's a low number, then the Fed will sort of be right in their wait-and-see approach, and they will actually wait till there's a higher momentum till they actually intervene in the market. The U.S. dollar has been really weak against the major trading partners for the majority of July, and the main reason was the tapering arguments. Ben Bernanke, the Fed chairman, was very dovish in his statements. And then there was a bit of a back and forth between other Fed members that contradicted or clarified, as they called it, his statements. So all this has created sort of a U.S. weakness. It's not really sort of fundamentally based. The U.S. GDP beat expectations. We had earlier this week the ADP, the private payrolls, came out at around 200,000 new jobs as well in the private sector. So it all points to a sustained economic recovery in the U.S. Maybe the pace is not there for the Fed, but there's definitely signs of a recovery. And Friday's NFP number will sort of confirm that this is a real recovery and that it could sustain the momentum to going forward.